Good morning, good afternoon, good evening. I would like to welcome all the participants to the webinar today. So in terms of the agenda items, we will cover three main discussion points, which are centered around BPO engagements. The first one, we would cover the top enterprise side priorities in the BPO space this year and with some forecast for the upcoming 12 months. Next, we would also be covering the some of the interesting observations that we have observed based upon our advisory engagements with the enterprises side as well as the service provider behavior. And the third one is wherein we will talk about what are the key and essential value drivers that could lead to winning discussions between the enterprise side as well as the service provider side. We also intend to take a few of your questions in this webinar towards the very end. So keep the questions coming. You can use the Q&A chat window as part of the Zoom console to ask questions. And we would also like to keep you active, and we would seek your inputs on some of the interesting, hot and trending topics via a couple of polls. Okay, all right. I think let's begin. Let's talk about the enterprise priorities and how they have evolved in the last 12 to 15 months. So if we look at the time frame, in the last 12 to 15 months, things have completely changed. Back from the COVID days when the supply was just short in terms of meeting the demand. Now the scenario has completely changed. And one of the things that we find consistently to be the top challenge for the enterprise side is the cost and margin pressures. Now, why is this happening? This is important. This is because of the global slowdown which is happening across the globe, due to n number of factors, one being the geopolitical risk and several others. Now, what is happening is that the enterprise bottom line as well as the top line is getting compromised, and the effect is now on the outsourced cost, right? And this is not specifically for one industry or two industries. This is one of the things that we are looking across the board, across the industry and business segment. One of the other significant change that we have observed in the last 15 months or so is the impact on the talent market. So if you look at the page, talent acquisition and management, which used to rank number 1 in 2022, actually went down to number 3 in 2023. And now it is not perceived as a big challenge. It's sitting at number 8. And adapting to evolving customer needs is a business challenge, which is consistent. It ranked at number 2 in 2023, and it still ranks on the second spot this year when we did the key issue study survey. Slowdown in demand and adapting to new business models. Again, they have come up one spot compared to the last year. And the increased geopolitical and location risk, this is happening for some time now, and it is currently at rank 5. And you would have heard the news about Iran attacking Israel. That would just amplify the perception and impact of the geopolitical tension, which is gripping the outsourcing industry as well. So in a nutshell, rationalizing the outsourcing cost is the number one priority in the months to come. And this is also substantiated by the fact that we are getting numerous inquiries on the outsourced rate cards, the outsourced pricing. What are some of the negotiation drivers that can help rationalize cost, improve service quality, enhance transformation and innovation? So yeah, interesting times ahead. Rahul, you have been closely tracking the growth of the BPO market as well as the ITS service market. How has been the growth trajectory till now going into 2024, and how does the forecast look like?
Thanks, Kunal. Yes, certainly quite interesting times that we are in, right? And some of the macroeconomic factors, right, that you just mentioned has certainly hit the overall IT BPS market, right? And if you see, the overall graph, right, the visual that we are currently showing, which covers the industry revenue growth at an overall level. So we have looked at the top 26 BPS players as well as the top 20 major ITS players, and try to look at how has the trend been in terms of the revenue growth across the ITS as well as the BPS market, right? So the dark blue line that you see is essentially the ITS the market growth, right, that we are representing in constant currency, while the relatively light blue line is essentially the BPS market, right? So as you can clearly see, right, the ITS growth, right, has certainly dipped, from the last, few quarters of 2023, right? And if you compare, right, it's almost close to, 0% growth, right? Certainly, right, few service providers have also seen, a complete negative growth as well, right? And if I look at the BPS market, it has been still relatively resilient when compared to, the overall ITS specific growth, right? And this is the current situation, right? I also want to just highlight and try to compare the current situation in along with what we observed during the COVID time frame, right? Especially if you look at the quarter two of 2020 time frame, right, where the COVID had really hit, right? Both BPS as well as the ITS growth, right, was actually hovering about that -3%, right? And that's where we had observed a lot of price decrease in the market, right, during the COVID time, and a lot of the service providers faced a lot of pricing pressure, right? And then of course right now also things have not completely changed, right? In the middle, right, we had that vast time frame of continuous price increases that we had seen across the BPO services, and currently, right, we are certainly seeing a lot of pricing pressure in the BPO market as well as on the IT services side. I also wanted to bring some of the industry flavors as well, right, as we speak. And certainly, I think it's not that all the industries have faced similar impact. So if I talk about, let's say, healthcare and insurance, right, they've certainly seen relatively higher growth. And in fact, even on the pricing side, right, on the healthcare BPO areas, the insurance BPO areas, right, we have seen some relatively less pricing pressure, right, compared to some of the industries, right, that we have seen clearly put under a lot of pressure considering the overall economic areas, right? Specifically telecom and the technology verticals, right? So areas related to the overall content moderation, contact center certainly has seen a lot of price impact, right? So this was more about the how different industries we are looking at, and of course we'll cover more regional as well as functional nuances, right, as we speak further. Right. So I'll just hand it over to Sahil, right, to cover some of the pertinent trends that we are currently seeing, specifically to PPS. Sahil?
Thanks, Rahul. So, going back to what Kunal was also articulating, right? A lot of what we're observing in the market is a direct function of a very complicated and challenging macroeconomic environment, right? And I can talk through two examples that we're observing. One is through 2024, there are minimum wage hikes that are planned in Eastern Europe, right? There's a slowdown that we're observing in the UK market. Now, all of this put together is going to force service providers and buyers to rethink their outsourcing objectives, right? In terms of moving away from managing attrition and service delivery, which were top priorities in 2023 at the height of the talent crunch and talent crisis, right, towards cost. And one of the ways in which they will be doing this is through contract benchmarking, right? Which includes price benchmarking, which includes terms and conditions benchmarking, which includes performance benchmarking, so on and so forth, right? I think the other trend that we saw at the height of the talent crisis of 2023 was portfolio diversification, right? Where we observed that buyers and enterprises were more amenable to working with a multitude of service providers, right? I think what we're observing now is a bit of a reversal of that trend, where there is rationalization of vendor portfolios that is taking place, right? There is a proclivity to reallocate portfolios and drive cost reductions through volume-based discounting. The third trend that we're observing is specifically around innovation, right? And innovation funds specifically that we're observing in contracts for large and mature buyers, right? These funds typically constitute anywhere between 1 to 4% of the total contract value and are used to drive digital transformation agendas, POVs and POCs in new age areas, including Gen AI, right? And since I've uttered the magical words of Gen AI, let me also get into that a little bit in terms of what we're observing in the market, because I believe there were quite a few questions that we had on Gen AI in our before the webinar, right? So what we're observing is that a lot of service providers are experimenting with POVs and POCs in the Gen AI space. And we believe that it will at least be about 8 to 12 months before they are able to articulate, quantify, and commit to any benefits coming out of Gen AI, right? At this point in time, the benefits that we're observing from Gen AI are incremental across areas of BPO. So that is something that we've been observing in the market. Kunal, should we check with our audience in terms of what they believe the quantum of price increase will be?
Sure, absolutely. I think it's time for a poll. Like I said, we will keep you occupied. So the question for you would be, what size of price increase are you entertaining for BPO services? There are no MCQ polls in our session today. You have to pick one. And I believe that this would be a tricky questions because price increase is a function of a multitude of factors. So let's start the poll and let's see, which option scores the highest.
Interesting observations coming through.
Yeah.
I see
Yeah.
a lot of focus on pushing for price reduction.
Yeah, it's not a single skewed response till now. Let's give it 15 more seconds so that we can just finalize the results of this poll.
It seems we have a fair bit of
Yeah.
enterprise crowd with us in this case.
Absolutely. So I think pushing for a price reduction has scored 34%, and 2 to 4%, interestingly, did receive 26%. 0 to 2%, which is more like a nominal price increase, received 23% of the votes, and no change to the existing rate card. Just taking a simple view, also received 1 out of every 6 votes. Rahul, I don't think so that this is surprising for us, right? This is what we have been projecting as well to be the price increase quantum this year. And there could be pockets wherein the price increase could be higher, depending upon the services nature, depending upon the locations, depending upon the dynamics of that particular country itself. But yeah, pushing for a price reduction is about 1/3. So what are your views on it?
Yeah, I completely concur with you, Kunal, right? Certainly, we expected, the overall price reduction, right? So to say, as well as, the price change, right? No price change to be probably the top 1 and 2. And that's something, that we are obviously seeing in the market as well, right? Considering the overall macroeconomic situation, the pricing pressure, right? A lot of enterprises are definitely pushing their service providers, right? On won some of those cost reduction, price reduction mandates, right? And of course, we'll kind of cover some of those insights, right? We are seeing, some bit of competitive tension being introduced by, a lot of the enterprises. That's also resulting in some of these, price reduction kind of a mandate. We are also observing, a lot of COLA waivers that enterprises are asking, and even short-term discounts, right? So certainly, I mean, it's not a surprise, right, that we have 34%, right, which are almost pushing for a price reduction, and even 17%, right, kind of no change, right? So yeah, Kunal, certainly what we had expected.
Okay, let's move to the next section. Now, we as advisors have been really busy of late. The nature of the challenges posed to us itself has become really challenging. Across markets, we see a difference in the approach when it comes to the pricing, when it comes to solutioning, when it comes to the whole contracting stuff. So our next section, we would focus on some of the interesting observations observed across regions, so that the audience gets a perspective of what's happening across key markets. And we have covered APAC and EMEA regions in this particular webinar. We will also be covering aspects on the digital solution, which is paving the way for new and commercial financial structuring in engagements. Rahul, APAC market, if I may, is perhaps the most interesting from a deal structuring and a pricing standpoint. We are seeing very aggressive deal structures and pricing of late. Would you like to speak about the recent trends in the APAC market?
Sure, Kunal. I mean, definitely, people would generally expect us to cover, the North American and, European regions, right? Traditionally, I mean, having definitely cornerstone, right, of the overall, BPO market. However, APAC has been quite interesting, specifically in the last 1 or 2 years, and, one of the fastest growing regions as well, right? So that's where we thought of covering, the APAC market specifically, right? So before I, talk about some of those, key insights, right? I just wanted to cover, some of the buying behavior characteristics, right, that we generally see with some of the APAC, specific stakeholders, right? And in fact, we were recently analyzing some of the APAC deals to decipher the overall buying behavior, right? Specifically for the BPO, deals, to look at, okay, what are the evaluation criteria? And what we have actually observed is that pricing as well as transformation, right, tend to be, one of the key levers, right? The overall weight that, a lot of the APAC stakeholders, organizations put in, right, for these two levers are much higher, right, compared to, let's say, a North America or North America or even Europe, right? And if I now talk about some of those specific trends, right, looking at those buying behaviors, right? Certainly, the overall, competitive rate card and pricing, right? We are seeing even more scrutiny, right, by a lot of those enterprises, right? We are seeing a lot of even higher levels of negotiations, especially in the APAC market, on across the whole overall rule structures. In fact, within APAC market, we are also seeing a lot of movement in terms of the portfolio, location portfolio as well, right? Some of the providers and enterprises are looking to move to some of the low cost locations, and that's where a lot of those rate cards are coming into the picture. Even if I talk specifically about Japan, right, we have seen the overall pricing have becoming even more competitive, right? And this is also fueled by the overall local currency depreciation, right, that we have seen for Japan vis-a-vis vis-a-vis the US dollar, right? And also emergence of some of those local regional service providers and usage of those tier 2 locations, right, within Japan. That's where we are seeing even more competitive rate cards. And coming to the transformation agenda as well, right? We are seeing those increasing number of questions around on, the overall digital solution, the Gen AI specific areas, and not just, those jazzy words, but what value, right, a service provider is kind of, getting, right, the enterprise is kind of getting out of it. Even volume-based discounting is something that we are seeing increasingly being asked, and even more, more aggressive, postures enterprises are currently putting out, right? So one of the deals, right, that we were doing, currently, especially for Japan and an Australian market, right, we actually saw a very high, volume discount compared to the typical, spend levels, right? We saw almost 4 to 7% discount that people were observing, right? And even if I talk about some of the payment terms as well, right? We are seeing a lot of aggressive postures being asked by enterprises, especially considering the current scenario. Some of the short-term favorable payment terms are essentially being asked by some of these players. So now we talked about APAC as a region. I think we can now also talk about some of the functional nuances, especially on the pricing that we are seeing. Sahil, do you want to cover some of those area nuances, especially for the healthcare BPO market?
Sure. Thanks, Rahul. So what we're observing is what service providers generally do is they bucketize offerings based on framework of 3-4 parameters into 3 areas, right? Sitting at the bottom of the complexity pyramid are transactional services such as customer service, claims processing, so on and so forth, right? What we're expecting is a slight discount in the pricing of these services going forward. In the middle of the complexity pyramid are domain intensive of offerings and services such as clinical testing, claims, which are specific to life sciences and healthcare, right? Interestingly, what we're observing and we believe that this is going to be the trend through 2024 is that service providers will be able to charge a slight premium in the pricing for these services, and the same holds true for value-added services, which typically sit at the top of the complexity pyramid, right? This includes process consulting, automation, AI, so on and so forth. I think interestingly, it's pertinent to mention over here that there are a few services within domain intensive and value add areas, right, which saw a double-digit increase in 21-22, right? But that increase is slated to come down to 3 to 5%, right, over 2024, and this is also in line with what our audience believes. Kunal, I think we've got a poll coming up next.
Yes, absolutely. Thanks, Sahil. Good insights. Time for a new poll. Okay, so this one perhaps is even more interesting than the previous one. And herein we will check whether you are evaluating the ROI and the payback period of the proposed digital initiatives from the service providers. Now, you have to select one of the 3 options: no, yes, and sometimes. We can start the poll. Well, we have a mature audience right here, Sahil, Rahul.
Yeah.
Which is good. Okay, let's give another 20 seconds to our participants to key in their responses. Okay, I think we can end the poll in. Okay, it's already ended. So 56%, Rahul and Sahil, has voted for yes for every digital initiative proposed, and that's a very big number. Sometimes, again, it's a handsome 39%, and no is 5%. I think we have a pretty mature crowd here, which is good. And it leads me to talk about some of the interesting metrics that we see for digital automation, analytics, etc. So if we can move to the next page. Now, one of the things that have come up in the last 2 to 3 years or so is that the enterprises are really looking and scrutinizing the ROI and payback period from the proposed, digital initiatives. Now, we were part of an advisory engagement with a retail enterprise wherein we were presented with a suite of digital products and projects by a global IT BPO provider. Now, out of the 4 digital solutions tracks which were proposed, only a couple of them had a net positive ROI. And only one of them actually followed the ROI norms, which are being shown here, the range. And it was very interesting to see that the provider didn't did its due diligence on the ROI and payback period, because once it was presented to us, our first question was, so what, right? Because it's a very important conversation when you are talking about things that can actually, make changes to the workflow, create disruption in the overall process, and it just changes the way the agents and the associates are doing things, right? And it was very interesting that they didn't had a ready answer in place, and they took about a couple of weeks to come back with a clear-cut ROI and payback period schedule. Now, if we were to contrast the ROI of digital solution, it has trended upwards. So it used to be about 2.8 at the median in 2022. And in 2023, when we did this exercise for the PNC insurance market, it stood at 3.2 at the middle, essentially increasing by about 13%. Now, why is the ROI increasing year on year? And this is not just a single year phenomena that I'm talking about. We are seeing a spike and increasing trend in the ROI. A couple of factors. One, the service providers are becoming more aggressive in committing the gross benefits. And number 2 is that we are seeing interesting commercial models to charge for that automation. And herein we are seeing waivers to be given. Service providers are putting a part of the fee as investments, and even at risk as well. So if they achieve those benefits that they are committing through their proposal, they will be entitled to recoup some of the withheld fee, and hence the ROI is increasing upwards. With that, Sahil, one of the new things that you did since your joining is that you have worked on multiple European deals, and you have supported European clients with very incisive insights. So would you like to talk about the trends emanating from the European market?
Sure. I think if we can move to the next slide. Yeah. What we've observed, and before we jump to UK and Europe, right, what we've observed in general is that North America-based buyers are a little more aggressive in terms of leveraging offshoring and outsourcing, right, to reduce cost compared to their UK-based counterparts. Now, even within the UK and Europe region, right, we've seen an increased proclivity from UK-based buyers to leverage outsourcing. They've been seen to leverage locations such as Egypt, Morocco, Ireland, South Africa, apart and aside from India and Philippines, right? So that's one observation that we have. I think for the Nordics market, what we've also observed is an increasing proclivity to sort of outsource and work with providers in areas of finance and accounting, BFSI specific areas such as KYC and back office operations. For customer experience and trust and safety, we've observed Nordics-based buyers to leverage Eastern European locations, right? And there's an interesting observation that I'd like to make over here with respect to Eastern Europe. I think I touched upon it earlier as well. So there's minimum wage hikes that are planned across the three popular locations of Eastern Europe, right? And this is expected to sort of put an upwards pressure on the pricing of BPO services from these geographies. But what we also believe is that this will be offset partially by a reduced buyer appetite for delivery from these geographies. So that's one observation that we feel will continue throughout 2024. I think in terms of another interesting point, right? So one of the trends that originated at the height of the talent crisis in 2023 was increased insourcing and adoption of in-house GBS centers, right? Buyers believed that they could mitigate, the challenges that they had around attrition and service delivery quality by bringing more work in-house, right? I think what we're seeing now is a variation of that trend where there is increased adoption of build, operate, transfer, and virtual captive models. So these are some of the trends, geography-specific trends that we are observing. Over to you, Kunal.
Yeah, very interesting insights from the European market, especially at the backdrop of higher minimum wages and cost controls and the economic's global slowdown. Certainly, the equilibrium is kind of challenged, I would say. Okay, so as
Exactly.
we move to the next page, we have an offering for our audience, and we have a complimentary offer for both the enterprise side as well as the service provider side. Now, you can sign up to access price benchmarks across any two roles from a set of three functions which are shown here, and any two countries from a set of three countries which are shown towards the right. Now, so do use the chat window that comes up and click on the link provided. We would be happy to set up a conversation, provide intelligence on the combinations which have been asked of us. Just a quick note, this offer is for both the enterprises and service providers. So just click on the link and provide your requirements. Okay, so let's cover another set of interesting stuff. Moving ahead. Okay, so let's now cover what are those essential value drivers that can result into savings, better service quality and performance, encourage transformation, innovation. Rahul, shall we delve right in?
Sure, Kunal. Thanks. So if I first of all talk about some of the top saving drivers, right, that we saw in the last year, right, and some of this is actually coming from some of the initiatives that enterprises are taking up, right, to overall things like overall portfolio rationalization or even consolidation kind of activities, right. So certainly enterprises are looking at adding new cost-effective centers to their overall portfolio, right? And one of the example that comes to my mind, right, is an healthcare payer, right, based out of US, actually looking at South Africa as a geographic location, right, for delivery in terms of the overall English speaking talent as well as some bit on the healthcare side, right. So that certainly comes to my mind, right, when I talk about some of these cost effective location, not just in terms of looking at, let's say, new nearshore or offshore location, but people are also looking at some of the tier 2 cities, right, especially even in the offshore locations like Philippines, right, where locations like Iloilo is kind of currently being looked at. We have also seen cases of portfolio consolidation, right, and buyers looking at expanding the scale of their current vendors with the in order to try to look at even higher higher benefits, right, that they can get out of such an huge RFP. And in fact, we are currently observing pretty large RFPs, right, greater than even 1,000 FTEs, in the recent space, right. So that's something that is worth noticing, and even there's some bit of scope expansion as well, right, where some of the incumbents are currently looking at. We're also seeing, looking at pricing model change, right, or overall engagement model change by enterprises with a view to have a more balanced approach and have more efficiencies, right, in terms of the overall pricing model. And we have in fact helped some of the what comes to my mind recently is a high tech client, right, that we have currently supported on helping them move from an FT based model, right, to a transaction based based pricing model on the content moderation specific area, right? And the whole objective, right, that the enterprise was looking at, okay, can I get more value, right? Can I get more savings out of this whole process? And in fact, even the transformation and innovation is certainly quite talked about topic, right? I think my friend Sahil has just talked about Gen AI, right, and some of the additional productivity that are sought by the enterprises, right? So that certainly is something that we are we can kind of continue to see, and even not just Gen AI, but even a lot of providers are pitching for usage of the current overall digital technologies that enterprises have already currently deployed in there, right? So trying to optimize the complete usage of the let's say ERP platform, or bringing in some bolt-on solutions, right, in the BPO area, right? So that's something that we are seeing currently. And next, I would want to talk about how, if you go to the next slide, right, how some of these savings are being realized, right, and by introducing a competitive tension, right? And one of the case study, right, that comes to my mind is a leading payer organization, and I want to just bring to the notice, right, that back in COVID times, right, this payer actually faced a kind of a cartel from its service providers, where each of the service provider tried to reach out to increase the prices, right, in the upwards of almost 10%, 15%, in some cases about 20% as well. And then of course those kind of price increases were not met eventually back in the post-COVID era. However, now, right, some of the service providers again reached out, right, for increase in the pricing, and that's where this time, right, the payer organization introduced competition, introduced two more suppliers into the member services specific area, call center area, and that's where we saw a pretty competitive bid, where the same provider, right, some of the incumbents actually reduce their overall pricing, reduce their overall TCV by putting up a lot of automation kind of areas, and what we have overall observed, right, almost 2 to 5% reduction that this leading payer organization actually observed, right, while the service provider earlier were asking for even hikes, right? And similar observation was done for a leading utility firms, especially in the finance and accounting and order management, supply chain specific areas as well, where they tried to bring two service providers into the loop, and which resulted in overall TCV reduction, right? In fact, as we speak, we are observing a lot of these kind of notional deals in a way, right? With a lot of those RFPs being rolled out to bring in this competitive tension in the market, which is leading to a higher pipeline overall for a lot of the BPO players, but it's not actually translating into that higher growth revenues, right? So that's how what a lot of the enterprises are currently trying to do. Yeah. Next, I think I'll ask my colleague Sahil to cover some of the other ways in which enterprises are looking to realize the same.
Thanks, Rahul. So I think there's a few ways in which enterprises can use non-rate levers to realize savings, right? At the top of that list is obviously FX. Currency depreciation against the USD over time, right, is a very effective lever. And I'm not talking about, again, what's happening in Eastern Europe, but in general, it is seen to be a lever that enterprises can deploy effectively, right? Depending on the process complexity and predictability of operational parameters such as AHTs, volumes, alternative models of pricing can be explored, which also incentivize service providers to deliver additional productivity, right? So that's another area that can be leveraged. I think Cola is fairly self-explanatory, but apart and aside from that, there is one particular lever which can be deployed by enterprises to negotiate or push for lower pricing, and that is on the flexibility of service delivery and performance, right? What we've observed is a stringent SLA regime often incorporates a risk premium in the pricing from the service provider side, right? So incorporating some form of flexibility can result in lower pricing for those particular services. I think one of the other levers that we've not mentioned on the slide, but we got a question about it ahead of this webinar, was around payment terms, right? So usual payment terms that we are observing are in the range of 60 to 75 days, but we're expecting enterprises to push providers to commit to additional discounts, right? If these payment terms are reduced. Shorter payment terms, that is 30 to 45 days. We're observing these primarily in shorter term contracts and projects in areas like consulting. I think, Kunal, if you want to cover some of the other areas that can be leveraged.
Yeah, absolutely. So in the recent past, what we have observed is that, the enterprises are having this tussle with the various incumbents and even new providers, wherein the providers are just, proposing rates which are kind of out of whack. And luckily, we have supported multiple enterprise clients through our benchmarking intelligence. And, I will just talk about one example. Last week, we were able to create a win-win situation between the parties involved in an outsourcing deal, wherein the renewal was signed at a projected spend reduction of about 8% for the next 3-year term. And, the benefit for the service provider was that it didn't lead to a competitive situation. And for the enterprise, they wanted a cost reduction. They received cost reduction, but not exactly a rate reduction, but overall fee reduction through a host of solution measures as well, wherein the service provider committed more productivity from digital solution and transformation initiatives. So we are talking about a win-win situation here. We are not talking about just handhold, just arming the service provider with negotiation tactics. So we have seen cases wherein the enterprise did use benchmarks which were completely outdated, weren't even relevant. And the consequences were a bit detrimental. One, wherein the enterprises found that the rates were that the rates should be actually lower, and those scenarios actually led to a reduction in service quality pretty early on in the engagement itself, because the service provider staff resources which weren't paid much, and in terms of the service quality just wasn't up there, right? The other consequence of let's say estimating that the rate should actually be up and is basically just losing money on the table, right? You're not negotiating to the extent that is required, and you are paying much higher than what your peers are paying for the set of services which are outsourced. So out of data, benchmarking data often lead to decisions which are completely erroneous. The second one is, we provide context, right? And that's very important, because the operations could be done in n number of different ways. Your business model could be completely different from another peer. And that's where contextualization comes handy. What is the scale of the contract? What is the location coverage? What type of service quality and KPIs are you demanding from the service provider, right? Those are the things which can impact the rates. And, an enterprise should have a good understanding of the context and, how their deals are being serviced. The third one is, a handsome in ROI on the investment. So we have been advising enterprises for the last 13 years now. And based upon a study that we did internally, the enterprise stands to gain about 5 to 20x, where X is the cost of the benchmarking exercise or benchmarking relationship that they have with us. Because simply, the benchmarks can be used across a set of SOWs across locations, and it can also guide you in large RFP situations, which can essentially shave off millions of dollars from your outsourcing spend. So, the ROI is self-funding, and self-funding would be an understatement. It's actually much, much higher. It says 5 to 20x. So with that, Rahul, why don't you provide the audience a real life experience of, how a negotiation was done between a high-tech client and its provider?
Thanks, Kural. This is again, one of the leading, technology company, right, that we had, recently advised, right, and one of the large, incumbent, one of the largest, suppliers, right, providing both IT and BPO services was the incumbent. You can consider it a kind of a very large deal, right, with a spend of almost, US 150 million, right, across annual spend, right, across different services. However, one of the challenge, right, that the enterprise in this case was facing was the overall, complex commercial terms, overall structure, right, and they had specific objectives in mind, right, not just focusing on price and rate cards, right, but they wanted to look at overall rate card structure, right, and the complexity of rate card structure, right, something that they wanted to reduce, right. So can you actually rationalize, right, some of those roles and simplify, right, even in terms of some of the language premiums specific requirements, right, it was quite complex, right. There were the overall multipliers that were mentioned were almost 100% of the current rate, right. Some of those levers are something that they were looking at insights and how those could be optimized. Even some of the onshore specific roles, right, they felt they're charging bomb and wanted to kind of reduce some of those elements, right, along with specific contract terms related to the COLA adjustment, the inclusion of better innovative practices, as well as the volume discount structures, right. And that's where the buyer actually identified some of those priority areas, right, and had gone into the negotiation table with focused favorable outcomes, and what should be their current position for some of these specific levers, and what should be the minimum criteria, right, that they want to come ahead with, right, and they were backed by the benchmarking defense document across some of these levers, and that's where we found that almost 60% of all the outcomes that were listed, right, by the buyer, they were kind of agreed upon based on some of these open discussions, based on what market areas that we are seeing, and as well as there was some negotiation on the fees on specific onshore rates, right, that we eventually observed, and net, right, the whole contract was kind of simplified. Both parties were actually happy after this discussion, and kind of move forward, right, in their relationship, which is again continuing as we speak, right. So this is one example, right, where some of those tussle points between the provider and enterprises through an external advice, right, market perspective, right, just can help in fruitful discussion, right, win-win themes for both the parties going ahead, right. So that's something that we observe, right. Next, why don't we take some questions, Kunal, from the audience?
Yeah, absolutely. So we received a lot of questions before the webinar as well. So let me moderate a few. So Sahil, I think you did answer the question around the payment terms being seen as a big value driver from a contractual dimension. So I think that's already answered. The second question is related to Gen AI, right? And the question goes along the lines of what is the impact of AI, Gen AI on deal structures, assuming that the headcount needs may decline in the future?
Right. So I think right now it's still an evolving space. And what we're observing is that traditional non-Gen AI powered interventions, right, are also now sort of being repositioned as Gen AI powered. So the benefits that we are seeing are at least at this point in time incremental to what was already being committed by service providers before Gen AI came into the picture. right? So, which is also one of the reasons why we believe that it'll be at least 8 to 12 months before we see an uptick in these benefits. And it's an evolving situation, right? With each passing month, there are newer and newer areas of application for GenAI which are opening up, right? So I think it's an interesting space. It's an evolving space. What we are going to see in the next few months is an evolution of solutions to incorporate more and more of GenAI, actual GenAI powered interventions, and the benefits from these will increase from the incremental benefits that we are observing from POCs and POVs right now.
Got it. Thanks, Sahil. The second question is a bit interesting, and Rahul, so the question goes along the lines of, what's one of the impactful things to do that you hear are most often missed in managing outsourcing relationships?
Yeah, that's an interesting question, right? And I mean, again, Kunal, Sahil, we do this, day in, day out, right? Helping a lot of enterprises across their outsourcing relationship, right? And a lot of focus, right? We generally see around, your pricing, right? Even, some bit on the transformation side, right? What is the productivity improvement that you see, right? But I think one of the levers, right, that we actually miss a lot, right, is overall solution, right? That service providers is currently bringing to the table, right? So some of the elements, for example, would include, let's say, the onshore offshore mix, right? And probably one of the lever, right, with the highest potential of immediate savings, right? Even not just onshore offshore mix, right? Even how they are estimating, right, the overall effort, right? What is the consideration, right, that service provider has currently taken in terms of the overall AST, in terms of number of transactions that one person can do, right? Sometimes we've seen service provider overestimating the overall complexity, right? Or even in many cases underestimating, right? And then that's where the Q part of the equation, right? People tend to focus on the pricing, but the Q part, the quantity part, right, is something which is often missed, right? And we have seen a lot of cases where this really forms a bulk of the saving, right, potential, right, compared to just the price, right, and year-on-year productivity improvement, right? So that definitely comes to my mind.
Thanks, Rahul. I will take a couple of questions. The one question that came through was, are you seeing gain share pricing models in BPO contracts? If yes, what is the typical percentage of base price given as gain share? Now, definitely there's a lot of conversations going on regarding the outcome-based model, especially gain share model. Across procurement, sourcing, finance and accounting, contact center services, we are seeing usage of gain share pricing model along with one of the core billing models, which would be input based or a transaction based pricing model. So for example, pricing linked to enhancing the days sales outstanding in the order to cash, right? Or let's say higher collections being one of the metric for the outcome-based construct. So there are numerous such examples and use cases which we are seeing. The typical gain share is about 20 to 30%. Again, it really depends upon the contract, the size, the scale, the relationship between the two parties. But a typical gain share ratio that we see is 70% towards the enterprise side and about 30% towards the provider side. Even in transformation and consulting areas, we are seeing a lot of incentives, investments, and linked to gain share pricing model happening. So value-based models, performance-based models are being more common compared to last few years. The second question is, are there any new trends in the BPO space that the business leaders in finance should be aware of? Essentially, the finance and accounting service is now completely, it has changed in terms of the outlook. More and more enterprises are asking the providers to commit on business metrics. So, for example, day sales outstanding, or let's say, period close and number of escalations which are coming. So the number of KPIs have certainly increased in contracts. One of the other things is that the enterprises are asking a higher fee at risk in their contract so that, if there's a default on critical SLAs, the service providers are held accountable. So even from a pricing model standpoint, transaction-based pricing model is becoming more prominent. Okay, with that, let's move ahead. Okay, so just to talk about what value we deliver to our clients and the engagement model. So we work on a host of different projects that we cover either through the membership route or through projects. So things like sourcing strategy, solution design, risk management, pricing and cost, SLA KPI benchmarks, contractual guidance and support. All of these are covered under the two membership models, outsourcing excellence and pricing analytics as a service. We also work on a lot of custom project, let's say location portfolio strategy, provider rationalization, insights around repatriation or insourcing. All of those are being covered as part of the custom projects. Moving ahead. Okay, this slide just shows a snapshot of our comprehensive list of functions, locations, and role coverage. So we have dedicated set of analysts, experts, and leaders in IT applications, engineering services, cloud infra and cybersecurity, consulting and professional services, as well as BPO. Okay, moving ahead. Rahul, would you like to take this particular?
Yeah.
slide?
I mean, not just covering some of the services based benchmarking areas, right, in the IT services as well as BPO services, consulting services. We also help in overall software license benchmarking kind of work across a broad range of SaaS and cloud products, including some of the productivity and collaboration tools, or some domain specific or industry specific tools, or even the CRM or ERP kind of solutions, or even cloud management platforms, right? So that's something that we kind of cover in depth. And if we can move ahead, can you move to the next slide? Yeah, and also feel free to check out our blog with some of the latest perspective on pricing in the overall outsourcing services. A lot of new articles that you would see in the Gen AI, the impact of Gen AI, and even some of the outcome based, right? So feel free to check out. Happy to stay in touch across some of this. Okay, so we are close to the end of the hour at our end, and thanks everyone for joining in.